What is up, everybody? How are we doing? Are we live now? Can y'all hear me? What's up, chat? Happy New Year, chat. We got a new feature thanks to my platform. Do you like my scrolling text? I hope my microphone is working. Oh, yeah. I am surprisingly not asleep. I'm still transitioning. I'm like in the limbo period. I know one of the worst things, dude. One of the worst things about Cypress live streams has been the fact that I'm always tired because it's always so late here. But I'm still transitioning back from my little gallivant to the United States, so I still have a little bright-eyedness and bushy-tailedness about me. So, breaking news: is this who's the guy? Is this Reese Politics? Wedge 1812. Are you Reese Politics? Much love to Reese. Cat party. Guido, do you love the cat party? I'm not Reese, sadly. It's okay, man. You're you. We're happy about that ourselves. What's up, Mr. Theta Bucks? What makes us fancy? Is it my sweater? Is it because it says polo on it? It was a Christmas gift from my mom. Very fancy. What's up, CDLJ27? Pew, pew, pew. We're back. Thanks for the welcome, man. What's up, random YouTube user 8509? I like to say your full name. That's how I get the most satisfaction out of it. We doing the dip. We doing the dip life. It's a good dip life. Happy Friday, also, Mr. Theta Bucks. Oh yeah, my wife's got the flu too. It's major not fun for her. She's starting to feel a bit better. But yeah, dislike. Deep down, aren't we all Reese Politics? In a way, yeah. In a way. I mean, he is usually amped about GameStop, and I can say that usually I am amped about GameStop. Polo and the sliding text. This one makes it fancy. Yeah, it's a new feature. It's a new feature of the platform. What do we think, chat? Give us multiple thumbs up if you like our new fancy platform features. I also like when I refer to you guys as chat, it makes me think like I'm a real streamer. Maybe I'll start to attract a younger audience because I refer to the chat as chat. Do you think I'll get more viewers if I start saying, chat, are we cooked? I have to say that phrase. Sometimes I wonder if some of my old university students, if they watch my live stream, I don't think they do. But if they did, I feel like they would like it if they heard me say, chat, are we cooked? Mama Guido, all right, $100 cash. That's like, yo, these days, that's 5 shares of GameStop. Isn't that nuts? Just like a year and a half ago, it was like 1 and a little bit. Superflu, what's up, Kurt? Short Fridays. What's up, Tomer? Good to see you, man. Tomer says, hey, man, can you talk more about your analysis today? How likely you see the move 18 to 32 and the time frame. Yeah, I would love. We're gonna do a breakdown of that. Actually, we can work backwards if you like. We can do forecasting Q1 2026. If we look at the scrolling text, just so if anybody hops in, you always know where we are here. We'll work backwards. This is good since we're starting with the question here. Can you put live price of GME and SPY on the banner? That would be cool. I don't know how I can do that. So right now, it's just text is what I can do for the banner. But it would be cool if I could do live data feeds. What if I just replaced CNBC? Chat, what do you guys think? Should I replace CNBC? Chat, what if we straight up replace CNBC? What if we did that? What if I just became a full-time finance streamer? We could do like Peter St. Onge. I could do a finance channel. We could do things like analyze businesses. No. I'll just analyze. I'll always do macro, right? I'll only do macro. That's the way you have to be. Because if you only do macro, then you don't have to do calls, right? Like you don't have to do stock picks, which is tough, right? Part of what made Roaring Kitty really good is he always did stock picks. Macro is useful, but like you don't have to commit to stuff as hard. So it's a lot easier to just like, hey, I said we should expect a market downturn. I mean, I guess sometimes I did say that when I was doing. I should bring back. What do you think? Chat. What do you think? Should we bring back the SPY breakdowns? Did you guys like the SPY breakdowns? I haven't done that in a while because we became untethered from SPY. Like we were pretty closely. SPY would do something and we would do something too, and then we became like unlinked from SPY. Scored Alpha, Superflu is bad. Oh, you don't have it yet. The whole family is, but you nah. That's how I am usually. I'm usually the ironclad. I'm usually the ironclad immune system in the household. I feel like it'll be that way once the kiddos are arriving. Very soon. My wife is due in April. Very excited. Tom says it's always good to watch SPY. You know, man, it is good. I would have been a way better interviewer than the schmoes who interviewed our CEO. I could do that'd be fun. That'd be fun. Ah, man, chat. I really wanted to chat. Are we cooked? I keep wanting to say that. We can do a little bit of SPY stuff. Look, I'll tell you. I mean, a lot of my SPY analysis. We can actually take a look at what it's going to do right now. Like let's do some SPY analysis live. This is a little bonus thing. We didn't even get to our agenda yet, but we can do a little. Like I'll show you how I look at it. Right. Most of my SPY forecasting I do with Gamma, or I was doing it with Gamma and like momentum stuff. But understandably, it's connected to a lot of macro stuff, obviously. But if we bump over, do they move the buttons around for share screen? No, here it is. Here we go, squad. All right. So here we go. Let's move down. We got our composite Gamma around here. So what do we do? What's our price? I'm looking 683. I'm getting close to all-time highs, huh? Again. We're in a little put zone. Yeah, we're down here. 684. Yeah, actually, so this says we're right on the fault line. We're right on the Gamma flip line here. So SPY is actually a lot easier to forecast. Honestly, like I'll tell you guys, a lot of my powers went away once I think they caught on to whatever I was doing. You know, back in the fall of 2024. I mentioned this a few times. Like those of you maybe who were with us back in, back during the Reddit days, the Reddit days, like it was a lot of the things that institutions were doing with GameStop was very, very visible in the options market. It was very, very visible. It was very easy to see what was going on gamma wise, right? I mean, there were multiple days where I was like, oh, this setup makes it look like they're going to do this thing where they just like blow the top off and then we run up like a few dollars. And that happened like on the day, like down to like close to the minute that some of that stuff happened a few times. And then that kind of fell off. Lessened a bit, I would say, after January. So it was pretty intact, I would say, the kind of predictive powers in that sense through the summer, into the fall, into the winter. January started to get a little weird when they started to adjust the stock down. But then, right, we got some of the February stuff. That was a little visible. But then I would say once they started introducing the convertible bond stuff, everything got really opaque in terms of gamma stuff. What I would say is where it did not get opaque was over in SPY. SPY is a lot easier to predict stuff. Or I would say that, I mean, I don't bet on SPY very often, so maybe there's a little bit of bias because I'm not actually trying to bet money on it. But I've, I remember talking about big moves that I expected to happen in SPY. And that stuff, more or less, the turning points that was a lot easier to call looking at the data here. So we're right at a gamma flip line. So basically, right, what this means is when we move into call gamma dominant territory, especially because, right, SPY moves up. When SPY moves up, that puts a dampener on volatility, which means we get these slower, grindy, low range moves. As we move into call gamma territory, we move into put gamma territory, right? IV is going to spike up. So as SPY goes down, IV spikes up. As SPY goes up, IV comes down. That's usually the opposite of GameStop, although GameStop hasn't been doing a ton of stuff recently, so we haven't seen that dynamic come into play. Right, GameStop, as GameStop's price goes down, IV goes down. We are still seeing that, right? I mean, GameStop's doing nothing. We're going lower. We push lower. We push lower. We push lower. IV gets crushed. IV gets fizzled out. When GameStop starts to move back to the upside, then we see IV go with it, right? So SPY is the inverse of that. Why? I'm not exactly sure as to the causal mechanics of that, but that is something I've observed. That's what happens. So we get into these, as long as we're in call territory, over here, we're not in call territory right now. We grind up through there. Our call wall over on SPY right now is 687. So if we were, for example, to start moving to the upside for some reason, going into next week, we did have some gamma expire. We'll have to see what will happen with that. Maybe some little overhead resistance there at 687. Obviously, when it gets breached, if you ever we get a call wall breached to the upside, the following 5 days see a minor, a diminutive but indeed a positive return. So the next day after a call wall breach, usually we see a move to the downside. 5 days projected forward, we usually see a move overall to the upside over those 5 days. I would say right now we are in this kind of put gamma territory. So it does look like we kind of are starting to slide here. We are in position in terms of kind of our layout by strike. If we take a look at what that looks like in terms of expiry, however, we had a big expiry today, right? Big call gamma expiry today. As we look forward, though, definitely more toward the bearish side, with a very large concentration of put gamma skewed out on January OPEX. So what would I say going into next week? You can check me on this, right? Like I said, I do not trade SPY very often. So this is not trade advice on that. But take a look. Let's see what happens next week, right? So let's remember my comments. I'll try to remember my comments on live stream. I'm going to say I think next 2 weeks, I would say SPY moves down into January OPEX. That's what I would say based on this data we got going here. The fact that we are below that kind of call gamma territory. We have a lot of call gamma expiring. It's getting wiped off the board today. And then as we go forward into next week and into January OPEX, we are looking at primarily put skewed put skewed options environment, which is dominating market maker hedging to that point. So we should see volatility go up, and we should see price go ahead and track down on the index there. No, not crazily, maybe down into the 670s, something like that. But that's more or less what that looks like to me from a gamma perspective. So speaking of gamma, especially thinking about our friend, I don't think he's here today, but thinking about our friend Gamma Chad. Gamma Chad going through some difficulties right now. So if you have some time, just express maybe some words of appreciation for Gamma Chad. Gamma Chad's been a supporter of the channel and a good contributor here. So Gamma Chad, if you hear this, I'm sure you're busy taking care of things on your side, but just want to let you know we're thinking about you, man. We're praying for you, and we just appreciate what you've been able to contribute here for us these past few months. You've been following along the channel, man. So you're in our thoughts, you're in our prayers, and I hope anybody watching, listening, if you have a chance, if you know Gamma Chad's profile, you follow him, you exchange messages with him, just go maybe show some appreciation that he's there. That's all I'll say there. But thinking about Gamma and Gamma Chad. So yeah, so that's SPY. But let's double back here, take a look at chat real quick. Baby pool. Do we go swim in a baby pool? Oh, about when the baby comes? I got you. Like with what's that? Like betting for like Super Bowl, right? Or March Madness. Yeah, that's right. March Madness pool. What? Wait, what? Even at only 25 live viewers, I'm literally in the top 2% of streamers. Is it only 25 right now? Because on my screen, it shows a lot more. It shows I have, oh, I see. It's 25 over on YouTube. And then it shows me like a bunch of, didn't we get up? We got up to, we had quite a lot at some point. Didn't we get up to like 100 over on YouTube for a bit? But those were the big bullish days. A lot of filthy casuals have chilled on GameStop. Yeah, that's okay though. It's not as exciting. It's not as an exciting time. Not everybody wants to hear about GameStop every week when it's sitting at around $20. But that's okay. I know. Oh, Simple Rick, welcome back, man. Simple Rick, I thought you might appreciate today's article. Actually, I don't know if you had a chance to read. We can go over this. And this is following up on Tomer's question here. So let me bring this up. And this is to kind of break this down a bit more here. So right, Simple Rick, we love Simple Rick's running gag. Very good, when it's $16. But I think it also proposes a good question. Insofar as, how many of us prior to right now thought like, oh, we're definitely going to see $19 again. I'll tell you what, I was not thinking we would see $19 again. I think I did talk about, and we'll get to this as well. It's number 2 on our little rolling text thing down there. Is some of this accounting wizardry that's resulted in, say, pricing algorithms being able to walk us down into the 19s a couple times now. And, I certainly didn't see that coming, let's say, based on the, floor calculations we had been making, which stayed pretty consistent for more than a year. Yeah, like a year, close to a year and a half, close to, right? Very close to. No, exactly a year and a half. So this actually got me thinking, like, okay, what if Gamma Chad, what if Gamma Chad's right here, right? What would it take, even under this type of scenario? Like, what could happen for us to actually move down, pretty hard? For example, like I spent some time thinking earlier today, while many folks were asleep, thinking about what it would actually mean for us to go ahead and slide down to, say, this 200 monthly moving average here. And what we can see, right, is, all right, well, one of the things, Kitty didn't necessarily point this out on his chart directly, but right, he did pay attention to this monthly chart. He did go ahead and he did draw this line. But at the same time, if we bring up some of the moving averages, which show up quite a bit on some of his charts there, we can see, hey, yeah, well, one of the things that occurred was GameStop's price dipped very slightly and very briefly below the 200-month simple moving average. So, hey, if I'm looking at this chart, if I've got these simple moving averages up on here, and I see this again, I'm looking at this, I'm thinking about, oh, yeah, well, hey, why don't we just do that again, right? Why not 2 years? We just, we run down here to the 200 down around, well, $16, something like that. So I thought, hey, maybe let me give this a thought. What would have to occur, right? What would have to occur with respect to the stock to make something like that happen? And we can break a bit of this down in a little bit, but right, you recall earlier this week, as I said, I would post a write-up right on our video earlier this week about this. What I think is something like the accounting wizardry that institutions are using in order to price the stock down. And a lot of this has to do with the fact, I believe, that they are counting the warrants as dilution, without accounting for future capital proceeds from the warrants as an offering, which is very curious. I'm not sure why you would do that unless you were trying to price the stock down, right? And what this does allow is it says, okay, well, if you put that in, if you treat those as shares outstanding, because that's the thing, you can trade them, and maybe the idea is, with these warrants, they have to be hedged. I don't know what the actual institutional hedging requirements are for these, but if they are warrants, we do know, or if they are treated like options, we do know that these warrants are hard to get a hold of. That's number one. Actually, our Short Fridays here, our friend Kurt went through some very interesting experiences trying to get these things exercised, right? They even locked down his account for a whole month just because he asked about exercising these warrants. So these are very difficult. We can understand these are very difficult to get a hold of. So I would not be surprised if institutions were hedging these warrants using, right, so like-kind securities, as is their way. So one way to do that is to trade, obviously, is to trade something similar in the options market. We know the October 16th quarterly options are contracts that roughly approximate the warrants, but maybe to a certain extent, right, they have hedging requirements on those, and maybe in terms of shares. And possibly part of how they do that is or how they justify that is by saying, okay, well, really, right, hypothetically, we've got these shares out there, and we can price some of the value of the share. I mean, we know that some of the value of the share is priced into the warrants, but right, it's only something like 30 right now. It should only be about 30 cents that should have been taken out of it max. But if you include this sort of preemptive dilution without any of the capital proceeds, you do see possible pricings, a lowering of the cash floor that looks, it moves down into the 19s, right? So, or into the 18s, below 19. So I think I came up with a number that was something like 1890 or 1896 or something like that. So based off of that, I said, like, okay, is there something else they can do? Like, what could occur in order to move us down lower? What would they have to do? Obviously, there'd have to be something that Ryan Cohen would do, just like the warrants, in order to move us down a bit more. And so I thought, okay, well, that 200 moving average rate, that does move down there around 16, just south of 16. What would it take to move us all the way down there? And so I thought, okay, I came up with these steps. And I said, like, okay, right now, based on bonds and warrants, GameStop's got the potential to dilute down to up to a max of about 650 million shares. Now, there are other offerings that Ryan Cohen could do in order to increase that. I think all the way up to $1 billion. I think he's authorized to offer shares all the way up to $1 billion outstanding. But okay, let's say that we get to this number. That's with full dilution of all of the warrants and full dilution of all of the bonds. Our outstanding without these is 447 million. So I said, okay, if core business doesn't budge and somehow we don't collect any more cash and somehow amid all of this and stay at a 10 billion market cap, then we're looking at something like 15.38 a share at a minimum within say the next year's time, year and a half, something like that. But of course that doesn't make sense, right? That doesn't really work. It's impossible for us to get down there. I mean, it does make sense as a technical marker because in about 2 years' time, year and a half to 2 years, as we take a look over, back at this chart, this 200-month moving average, it'll get up to about $15 and maybe about $16 in about 2 years' time, something like that. There we go. But this is impossible to reach because it's impossible for us not to take on more cash with these offerings. For the warrants, right? So this is another thing I talked about earlier this week. Something is going to happen. Something is going to happen with the warrants one way or another, right? So either the company doesn't collect any money, and the warrants the warrants never get exercised. Okay, when that happens, this accounting wizardry goes away and the stock will price up because the implied outstanding will contract. That has to happen. Maybe it's delayed, right? Maybe it doesn't happen right away, but it has to contract. Or if they do get exercised and the outstanding stays as it is, the company gets cash, which means we also don't stay here because the company's cash reserves will go up. It'll prove to be another accretive offering because they'll be exercised at $32. So then on top of that, we've got stuff with the convertible bonds. And if we stay, again, if we're staying down around $20 or even $25, right, the convertible bond, the auto conversion price is like way up at like $38, I think. The auto conversion, I think, is like 38 something on the first pile and like 36 something on the second pile. So those things won't convert. They won't become shares. That's not going to equate to dilution. So if we just stay flat or go down, then those forces counteract the stock, right? So that counteracts the move down. So part of how this works is, yes, okay, it traps the stock within a certain range, but and maybe even adds a dampener on the upside to a certain extent because these kind of auto dilution things happen as we go up. But the problem is, as they try to figure out stuff to push us down, the auto dilution things don't happen and they sort of reverse, right? So that doesn't help that kind of push down. And I think in terms of what we're looking at in terms of price to book value and stuff, it's very difficult to move us, say, much below that kind of upper 18 mark. And that's what I was pointing out here on this chart that I drew up here is, okay, we take on some cash very slowly. We stay as we are. We kind of get a slight Bitcoin depression. Where could I see them driving us for this first quarter before we get some meaningful news from the company? In March we get the annual report, or we get Q4, so you can imply what the total previous year's earnings and such will be, and they're going to be good. It's year over year it's going right. We'll look at we will have a full year where every single quarter will have been profitable. And it actually kind of looks that sort of automatic, but this is offset, right? So Q1, Q2, Q3, Q4 will be profitable. Usually Q4 is GameStop's best quarter. We've got console cycles. We've got collectibles market expanding. That's going to start to factor in, and I would not be surprised if then we see something like a move up here. Now, why did I put this arrow topping out at 32? That's the price on the bonds. That's the, or excuse me, that's the price on the warrants. That's the face value. That's the strike price on the warrants. So, and then we've got auto convert bond stuff up here. So I would say that we could treat something like $32 seems to me like a max that they'll let the stock go up. And, that's fine. A little run up to 32 is good. We had a few of those. Those were very fun last year. Everybody liked the runs up into the 30s. I don't think anybody was very upset about those happening. And they both resulted in some very excellent proceeds raised for the company. This type of stuff is good, right? I would say my outlook, right, when I see this, when I see $20 showing up, when I see $19.99, I'm like, oh, incredible, right? Because at some point, that the company will, it will go back. Regardless of whether you believe, right, regardless of what are the three pillars? I think I've talked about this before, right? You've got the three pillars of GameStop in order of tinfoil, right? One of them is the fundamentals of the company. Can't go bankrupt. And really it does very scrupulously track its book value pretty closely. Their balance sheet is very excellent, and the company, there's very little to debate in terms of excess value over that balance sheet, over that book value. There's very little to debate. Now, if you want to argue there isn't growth potential, fine. The company's not, it doesn't have a growth multiple applied to it right now. It's not being priced that way. So, okay, you win the argument. It continues to not be priced that way. Wall Street agrees with you, so fine. Easy, right? But why should even more value come out of that little sliver above book value? Why should even more come out of that? Okay, it's shrinking in terms of, say, the legacy business. But you heard Michael Burry recently, right? It's looking a lot like it's probably it's trading at a discount relative to where it is going into a console cycle. Is it a shrinking pie? Sure. Legacy video games retailer, that's a shrinking pie. The collectible market is growing. It's probably not growing as fast as some folks would like in order to be able to be a bit more bullish on a growth multiple applied to the valuation of the company. Fine. But to shrink that sliver even more on top of the balance sheet, very difficult to find arguments to do that. So when that sliver shrinks even more, it gets even tighter. That's just exciting for me, right? Because I say, okay, well, even on that kind of fundamentals approach, which is kind of really all that Burry's talking about right now, at some point somebody's going to go, this is an opportunity. Console cycle's coming. There's going to be a couple earnings, right? Something like we saw around quarter two. These earnings periods, either we're going to approaching them, we move up a bit, or coming out of them, we move up a bit, or some combination of both. If we're trading at around $20 going into an earnings period, that says we're going to move up. That, there isn't anywhere else to go. As long as the earnings are good, and it does look like they continue to be good. If you see $20 going into an earnings period, you see $21 going into an earnings period, it's probably going up after that. And, having a stock go from $20 to $27 and back down again 3 times in a year is kind of the same as having a stock go from 20 to 41 and then just hanging out there, So I'm fine. I'm fine with that. I'm fine to see that. So you've got that kind of fundamentals thing there. Then if you want to get bullish about say the Gameshare stop away thesis, which I think is very realistic. I think that is what Brian Cohen is pointing toward. As far as a long hold, this is a guy who in his by age 39 is beating Warren Buffett in terms of returns as an investor by an order of magnitude, even when adjusted for inflation. I do not think it is an exaggeration to say that at least that this guy is trying to be the Warren Buffett of the 21st century. It seems like that's what he's suggesting to us. It seems like he wants to make GameStop at this point. This is where he is. He's going to make GameStop into the Berkshire Hathaway of the 21st century. That this is the vehicle, right? Because in the 50s, right? I just saw videos about this, right? Who thought Berkshire Hathaway was going to be the Berkshire Hathaway of the 20th century? It was a failing textile. Really, seriously, go look at the history of Berkshire Hathaway, right? Buffett's whole thing back in the 50s when he bought out the company, which he said was the worst business decision of his life. Buying Berkshire Hathaway is what he says is the worst business decision of his life. What was he doing? This was a company that was losing market share. They were declining in profitability. This was a company on its way out. And then ever so often, what they would do is they would sell off some of their assets. They would get a cash pile. The stock would move up. It'd be priced up after selling off some of these unprofitable assets, bolstering their balance sheet. And then Buffett would sell there, and then they move down a bit more. Then they'd sell more of their assets. Stock price would go up. That's what he said, right? And Buffett was, asked about, say, what he did and how he actually got more involved in Berkshire. Was that they were going to reacquire his shares or something like that. They were going to tender his shares, and the CEO of Berkshire Hathaway came to him and said, would you accept $11.50 a share? Would you accept $11.50 per share? We'll acquire your shares. There you go, and you're out. And so Buffett said, yeah, that's a fine price. I'll take it. I'll walk away. And so guy went off, tendered an offer, and it came back, and it was for $11. It was for 11 3/8. So he shortchanged Buffett by an eighth of a dollar. Oh, there's the end of it. There's market close. Shortchanged Buffett, didn't give him the original offer, and Buffett got pissed off and bought a controlling stake in the company, and then fired the CEO and took over the company himself and made it into Berkshire Hathaway. He said that was the worst business decision of his life because he did it purely from a sense of emotion, right? And he got into Berkshire Hathaway and realized that he was stuck and had to basically take the company and make it into what it became as a holding company. He had to go through that whole activist kind of transformational process. But it's very funny to listen to Cohen talk about how he'd love to do what Buffett does, and here he's actually kind of in the same situation as Warren Buffett. I'm surprised nobody has made this comparison yet, but Cohen is essentially doing now. Really, he's having to do now what with GameStop, in large part what Buffett had to do when he bought out Berkshire Hathaway. So that's pillar 2, right? That's pillar 2 of the GameStop thing, and then pillar 3 is the more tinfoil hat stuff, which is legacy swaps and hidden positions in all of these market mechanics. And the idea is some of that will come to the fore, but increasingly, I think we might see more of that kind of packaged in with what happens around earnings, sort of swap de-hedging and things like that. But you never know. The big daddy giga swaps, are they still out there in roaring kitty dangling the keys for maybe sometime in 2027? Is that what happened to did the January giga swaps that got pushed out into April and May of 2024? Did those get pushed out again into October of 2027, something like that? And then we have the greatest national cat of them all, or something. Who knows? But anyway, my point of mentioning this is, even if we do go down to 1880, even if we, in the unlikely scenario of 1660, it's like that's something that really excites me, because I don't see us not moving back to the upside at that point. It just continues, for me, it just continues to look like it just continues to look like more and more opportunity investment. So go ahead, let's see how far down they can push this thing. I'm interested at this point. Let's take some time for the chat. Yeah. Thoughts out to Game of Chad there. Hey, Day Swag, what's up, man? Yeah, man, I posted it on Twitter, but I should have pinned it, honestly. Maybe more people would have known. Yeah, 27 concurrent viewers. Oh, we're up to 35. It's growing. Growing. Express, what's the, is it Express Kitchens to Go? Growing, growing, growing. It's like a local Connecticut advertiser for kitchens. Express Kitchens. Yeah. No, there's not supposed to be a portrait version this time. I know that happened one time, but there's not supposed to be one. Biggest stream is 2.1K. Chatter, we cooked. Nah, it's going to come back. That was, look, the accounting method, because I know you can see them. I think not everybody views them concurrently. We did have a stream that was very well attended one time, though. But I want to say that was in the early days. If I go over to the channel, what we got here, because like some of these they collect a lot of views after we're done there. Earnings live streams. The earnings live streams were very well attended. Not Q3. Nobody cared about Q3. Where was the 2000 one? Oh, May. Oh, everybody around the Bitcoin stuff got super amped for live streams. And then Q2. Yeah. Q2. That was 2.1. That was our best. That was one of our best attended there. Very nice. Very nice. That's okay. Very happy to have our merry little band with us here today. What's up, Benji? The viewer count is tallied in millions. Yeah, dude, there's like 32 million people watching on YouTube right now. We're very live. Is that right? Can they change the exercise price on those suckers? That's very interesting. Do you know what document that's in? Is that in the warrant filing? What's up, Badlandeb? It reminds me of Aurangzeb, the last Mughal Sultan of the Mughals. What did they call their land? Did they call it Hindustan? I don't think so. They didn't like. I don't know much about the Mughals, to tell you the truth. Random YouTuber 8509 says, "What is your opinion of the price action in the ultra short term, i.e., next few weeks, considering taking a mild profit on a chunk of warrants?" Yeah, I think. What did I say earlier today? I think we are probably looking at. I don't think we extend too far up here. I think certainly below $22. Heading into January OPEX based on our options data. What else would I say? I think there's also probably a chance that they try to drive us maybe under 20, because we do have a fair number of GME1 warrants that are concentrated at $20 for January OPEX. They may try to kill those. Let's see. Can I bring a chain here? Oh, we got to go over here. Let me make my face smaller. And let me take this down. Let's get this away. So I don't know if we can see them here. 22. Yeah, it only says there's 7,000 at 20. Pop over here. They're 23,000 at $20 for January 16th. So there is a chance they try to push those out of the money. I would not be surprised if, maybe we get a little skip up into this week, and then that juices options a little bit. People get a little excited. Maybe we go into the 21s. Oh my gosh, this is it. We double bottom. The stock is recovering. Nope. And then we just kind of drift down into January OPEX. Then maybe a little bit of recovery again, right? A little couple weeks going into early February. Maybe we get a little volume de-internalized, a little volatility de-internalized. We get something like, right, actually, Guido pointed this out to me earlier today. Where's my little screen here? We got our FTDs. FTDs. Ooh, ooh, ooh. Do you guys like my song? That's my FTD song. Can I make this bigger? I can't. So I'm going to go over here. FTDs. We're looking for the FTDs. We like to find them and show them to our friends. There we go. So 2 million. That's a lot. I mean, the classic, right? The classic calendar, 35 calendar days puts us, for those on the 4th. Oh, that's a little small. Let me make it bigger. But of course, they're probably going to do their ETF thing. So that's probably how they got them cleared there. So what would that mean? That would mean if they do an ETF thing. Whoops. There we go. That would mean from the 3rd, we do T+6, so 1, 2, 3, 4, 5, 6 puts us on the 11th. Then we go 35 calendar days. 1, 2, 3, 4, 5. That takes us out to January 15th. And then we've got T+4 for a creation order to come in. So that's 16, 19, 20, 21. So yeah, so I think probably that makes sense to me. I think they keep things down. So they probably do this ETF thing. They probably keep things down into January OPEX. Maybe we close at 1990, whatever. So the 20s are out of the money. Whatever makes it so that they don't have to do warrant juggle stuff. They can just be like, oh, so sorry, out of the money. And then they don't have to do that stuff, and they can just wipe those positions. And then they mostly don't have to worry about warrants anymore. I think I mentioned that, right? This is a really important OPEX for them, that I'm basically expecting this to be max controlled into this OPEX, because it's annoying to deal with the warrants. And once they're over this one, they don't have to deal with that stuff anymore, really. The GME 1 stuff, they have made the spreads on that stuff terrible, so no one trades them. That's number one. And number two, yeah, there wasn't much stuff accumulated back in October for anything really too much past January. I think June, maybe there's a little bit in April. There's a little bit in April for April OPEX, and I mean a little bit. I think I mentioned this on the video too. There's like 5,000 contracts for April, and for June, June, there's more. I think June's closer to 20 or 25,000. So June's kind of the next one that gets a little annoying, but it's nothing close to like what we're dealing with now. So yeah, so that's going to be off. I think they're going to keep that stuff pretty tight. And then I think then those 3 days coming out of January OPEX, I think that's where we see some of those FTDs from December. I think those emerge there. So what's that going to look like? Maybe a couple days. We see some VWAP stuff, and it's going to be like, oh, we bounced off of that support at 19 whatever again, something like that. And then maybe we run up to like 2150, just shy of 22, and then we kind of cool off a little bit. And then, while that's happening, they can sell tons of February options, maybe even March stuff. Who knows, right? But something like that, and then we can see what FTDs look like. I imagine if they push this thing all the way down into December 31st, like they did, I wouldn't be surprised if around New Year's we had another pile of FTDs that then they can de-internalize in February somewhere. Yeah. Yeah. So that's what I think. Hopefully that answered your question. Who asked this question? Random YouTube user. Hopefully that answered your question about what I think. Well, price forecasting this stuff in the short term there. Does that make sense? I hope that makes sense. Yeah, we got a little slam at the close there. That talk. F3I. Yeah, Mr. Thetabugs. Yeah, Buffett's net worth was only 25 million. He was 39. 250 mil adjusted for inflation. Cohen at the same age. It's 5.6 billion. Yeah. It's greater by more than an order of magnitude, but an order of magnitude nonetheless. Thank you, man. Wait, what is this? Is the streamer cooked? What are you saying? I hope I didn't go mute and that. Oh, no, you heard the song, so I didn't go mute. What? Simple Rig, what are you talking about? GME should just buy a Tandy leather at 2.71 a share? Bodlon Deb, have you noticed for costs around 24th of July each year since 2022, there has been huge volume and price appreciation, outlier being July 2024, when it was front run earlier due to the GME sneeze? I did not notice that. Let's actually take a look. Ooh, what's this? Oh, chart. Okay. Let's take a look at costs. We're on the daily here. Okay. Oh, yeah, there we go. So, yeah, buying right around June in here. We'll move up. Pretty good. How big of a move was that? 8.62. Almost 100% move. So that's definitely an interesting trade. Honestly, kind of a nice, a very forgiving trade. This was a very forgiving trade. And then, yeah, the GME stuff this was pretty nuts. Oh man, that really went cowabunga, huh? $2. Yeah, that was like an 800% move. Let's go back. Let's go to 23. What's it look like in 23? We gotta get a July move. Yep. Yeah, you're right. Get a July move here. Tighten this up a little bit. Yeah. Big volume right there in the 24th, huh? Not a huge price difference, but that's a good trade. 349 to was a high. Dollar. Yeah, that's a 30 something percent move, close to 40% move. That's not bad. And apropos of nothing, right? Not anything to do with earnings. Let's see. Here's another one. Oh, wow. You are not wrong, sir. Oh, this was big too. Whoa. 25th of July right there. Guys, what are we doing? We just gotta chat. What are we doing with our lives here, man? We should just be trading costs every July. That's the. Do we have it back in 2021? It does not look like we got anything here in 2021, huh? But I mean, volume was nuts in general here. This is when it's doing, GME sneeze stuff. Oh my goodness. Cost went absolutely ballistic. Yeah, it's pretty much on the same beats here with GameStop in 21. 22, do we get anything around earnings? Not really. Not in 21. 22, where's 22? 22, we got this kind of March event, but not July, huh? Or did we get it? No, we did get it. 22, yes. 23, yes. 24, yes. 25, yes. So the past 4 years, for the past 4 years, we did get that in July. So hey, folks, we can. It's very interesting. Keep that, jot that down in your little trade books. I know you have your. I keep mine right here. Make a note of that. Costs in July. Yeah, Grok, let's hear it. Yeah, if you want to share that, I will definitely share that with the channel. So just to clarify this for Mr. Theta Bucks, I still think it stays around the 21 to 23 range. But I mean, relative to what we're looking at now, I would consider that that's a jump on the bigger side for now for this environment. Big thing. I think we're going to have to wait until after March earnings. Yeah. Yeah. Every year since 2022, Johnny, except 2020. Well, but for a different reason. Yeah. Hey, what's up, Chat Troy? Happy New Year, man. Happy New Year, man. Wait, in 1998? Wait, did this company exist in 1998? That's kind of fun. Have to zoom way out for this one. Are these swaps that date back to 1998? January volume there. May there. Not July though. Oh wow, really? Yeah. See January. Yeah, it's right around July. Very close to the 24th there, huh? Right here. Looks like 21st. Don't know if that's connected, but wow, they have a lot of data on this company, man. This company goes back to 1972. And they don't have candle information until 83. But that's a very interesting thing to see. Yeah, what's going down? What's going down with our guy Kevin? What's he doing, man? Should we be chat? Should we be cooking with Kevin? I'm trying to get the Zoomers on board. Chat. What kind of cooking do you think we should do? What's Kevin been up to? Chat, do we saute shallots in a white wine sauce with butter? Chat, is this how we cook? Can we get... Does Kevin Gill have a Twitter page? No. Am I doing it? Am I a streamer, chat? It was very funny. YouTube sent me like a message the other day. I had to do something. They were unhappy because, like, I don't know. They were like, well, we're not happy with your ad revenue or whatever. Because, like, that's why they like, that's their thing, right? Part of the reason, like, when I was setting the whole thing up, like, by the way, for any of you who are thinking about starting a YouTube channel, one of the things they'll do is they'll expose you, right? They'll give you like the normal algorithm until it's time to for your first 1,000 people, right? They'll test you out and they'll give you like all the normal algorithm stuff for like your first 1,000 views. And once you get past that threshold, they're like, congratulations, you deserve to be monetized. We're so excited to offer that to you. You're going to take the deal, right? And you're like, I don't know. I don't feel like it. They're like, okay, that's fine. You don't have to do that. And then they will instantly like take you off the algorithm so you don't get shown to anybody. Because I remember this was like December, right? December I started making videos. By like mid-January, I think I already had over 1,000 subscribers and I had the necessary views and stuff. And I was like, nah, I don't need to monetize. That's fine. And they're like, okay. And then for, what was it? Like all of February and all of March, like I like views really collapsed. So anybody who wasn't subscribed to the channel already basically wasn't being shown the videos. And I was like, oh, okay, this sucks. I want other people to be able to see what I'm talking about. So as soon as I turned on ads in like April, all of a sudden the views started to go back up again. Very interestingly. So they were upset about me. They were upset at me for something like I wasn't. They're like, you're not showing enough ads or something. And they're like, would consider streaming once per week. YouTubers who stream at least one time per week report much higher views. Ad revenue. Wink, wink, wink. So anyway. Streamer. Gotta be a streamer these days if you want to get all the premium hits. If you want to get out to the people, you want to get the kids looking at your content. Clarified butter. For sure, man. That is how we cook, chat. What if the next time we do a stream, we rename it chat, am I cooked? And then we really just, and then we cook and then we just make food and don't talk about GameStop at all. I'm thinking about pivoting the channel, guys. Okay, we're just gonna. It's just the entire channel is gonna be called "Chat Am I Cooked?" and I just make stuff. It's gonna be great. What's up, everybody? My name's Dr. Michael Opiano, and welcome to another episode of Chat Am I Cooked? Today we're working with exclusively clarified butter. It's pretty wacky. Not making glizzies today. Gang, gang, am I right? Is that still, does that meme cringe yet? Or is it gold? Does it slap? Yo, tell me if that shit slaps on God. Yeah, it's 6-7 now. Yeah. X views keep going up, so we must be doing something right. How are trades going, folks? Anybody anybody rule 390 yet? Anybody else got a pro tag? Anybody else mess around in that department? Hmm. You trying to oh yeah, you gotta swap brokerages, right? Yeah. Still recommend Schwab for all your amateur professional trading needs. They really mean, do you have a very basic sense of how not to mess up? I think that's what they mean. That's really what they mean between retail and pro. Because the assumption that retail does not know what they're doing is largely correct. Is basically what that says, right? What the whole 390 enterprise says, that it's like, oh, if you actually figure out how to do this, like we don't, no, we're gonna block you. You can't do that. We're just gonna pump the brakes there, guys. No. Let's see this from Chad. Kevin keeps liking comments with RK's Futurama GIF posted. On his caption, on his latest video, he said, "I'm all in." And previous movie reviews, he did Dumb Money in The Big Short. Yeah, what's Kevin Gill doing, man? What's he doing? I've not been on my Kevin Gill meme game, but yeah, if he's doing, he knows what he's doing is the thing. But the thing is he doing that for attention, or is he secretly like, is he like the Panaka of the Inca, right? Where like, the god emperor of the Inca, right, is his spirit is elsewhere, and so he's alive in his corpse. And then he has the Panaka are the entourage, and usually his dead sister wives, and then his sister wives when after he's dead, and then his sister wives, right? They speak for him, right? They like commune like with his spirit through his dead body, and they pass that, right? They pass the messages forward. So is Kevin Gill um, the Inca Panaka in this scenario? Bet you didn't know that about about the Inca. A fun fact for you. None of my undergraduates knew about that. Imagine being the Spanish, and then you show up, like you're just like Pizarro, and like you and 50 dudes show up, and they're just like, yeah, like property is held in perpetuity by our undead god emperors. We have 13 of them. You can visit their corpses and speak to them only through their sister wives, who can commune with them via the spirit realm. That had to have been an interesting experience. Also, we don't have a writing system, but we have this really awesome mnemonic technology where we like tie knots on a rope. It's surprising that it works, but it definitely does. Mr. Theta Books says switch from Schwab to Fidelity. So nice that they auto sweep to SPACs. Yeah, that's a nice little sprinkle on top there for the cash secured puts. Yeah, you have to do it right. You have to do it manually, I think, in Schwab. You have to put it into their money market fund, leave it there for a month, and then you can use it for cash secured puts, which is annoying. I think otherwise they give you like 0.8% or something like that on uninvested stuff on cash secured puts. It definitely, if you can do that, it definitely makes a cash secured put a lot more appetizing. Not a lot more, a little bit more, but it's better. If you can get 3 to 4% on top of. Random YouTube user, Kevin Gale, probably trolling the community, but also giving us a wink to hang in there. That'd be nice. That'd be nice. Yeah, if he were doing it solo and wrong, he would be tarnishing reputations. Yeah. I gotta think, right? His brother would be like, what are you doing? What are you doing? Yeah. Schwab, you have to move your assets into the Schwab fund. Wait 30 days. Yeah. Joni says Kevin Gill is trying to stay relevant. Don't blame him, but hard pass. Yeah, that would be lame if that's what we did. It's gonna be a running gag now for our live streams. Chad, I think we're cooked. Chad, are we cooked? Chad, is Kevin Gill cooked? Yeah, you think being Arcade's brother, he'd be careful not to hype up for no reason. Maybe it's a noise thing. I don't know. It could also be a noise thing. You know, trying to see what happens with algo stuff. Yeah, okay, good question. Bow to yourself, Sensei. What's your strategy for shorting calls these days with Ivy and price relatively low? So right now, what I have, let's see, what did I do in December coming out of earnings? I think I did 25s or 24s. I think I sold covered calls on that. And then I did cash secured puts for the rebound back to the upside going into the end of the year. Move some stuff around for tax harvesting. And right now I have positions split between $25 calls for February and $22 for January OPEX. So that's what I have right now. So it's split between those. I have still a bit in cash that I'm still a bit in cash, still a bit in cash secured puts. So it's kind of mixed, and it's mixed between different portfolios as well. So yeah, about a quarter, I would say, is allocated to cash secured puts. About about a quarter, maybe to a third is just cash right now. And then about somewhere between a quarter and a third, maybe about a third is shares, and then I've got the 22 February's, or sorry, $25 February call, and $22 for January call. So I'm a little bit more aggressive with the strike price as we're closer. So what did I think? I think I got about, I sold the 22s today. I sold the February ones actually before the end of the year. So those have depreciated about 20 to 25%, right around now. They're still around 20%, I think. And then I sold the 22s just today. And those I got about 25 cents for. So I got 45 cents, I think, for the February 25s, and I got about 22 cents for the January 22s. So I'm kind of a mixed risk profile thing here. Part of the reason that one of the portfolios is a little bit more heavy on the cash side and cash secured puts is that's for a tax harvest thing. So one of the portfolios I manage, right, taxes are a bigger consideration for that particular portfolio. So figured that, okay, we're probably going to stay around here. There's not too much to kind of squeeze out of an entry. The cash secured puts in there, right, they give a little bit of an upside protection in the sense of, okay, if something unexpected happens and we start to move up, okay, great, right? I've got these cash secured puts, like it's not nothing. But at the same time, it's not a share, so it's not going down as the same instrument. So it won't go down for a wash sale when I re-enter into a GameStop position in that portfolio. And then the other half is cash, because I don't want to be trapped in the cash secured puts and then take a loss if we stay down around like $20 or whatever, go down to 19 or something, which is possible. I don't think we'll go down to 19 proper that quickly, but something like that. And then kind of around OPEX, then once we're kind of past that kind of 30-day wash sale concern, that can get deployed, piecemeal back into, at a favorable price. I mean, depending on what the price is, we just, go pell-mell there and then sell some calls on top of that. But that's essentially where I am right now. Chat, are we cucked? I recently learned from Wiktionary what the girl version name of a cuckold is, and it's funny. It's Cuckwean, which sounds a lot like Cuck Queen, which is also funny, but Cuckwean. Yo, chat, are hedgies cooked? Yo, chat, are hedgies Cuckweans? Chads. Yo, what's up, Chads? Chads, are we cooked? Yeah, you're right. That's definitely gonna launch our views. Wait, is Wedge 1812? Either he's Kevin Gill or he's Wedge Antilles. This is just occurring to me. It could be cool if you're Wedge Antilles. Yeah, Johnny says selling calls has been rough with IV as low as it is now. Got to be patient for the vol to pick up. Yeah, that's the thing. It's like, part of that is, and I suppose why I have stuff split between 22s and 25s is like, it would be lame to get assigned at 22. I mean, it's not it's not the end of the world. But on the one hand, like, you don't want to get sort of max assigned at a price you don't like, or that Could be better. It's just lame. It's not the end of the world, but it's just lame. But this way, if you do multiple strikes, you can kind of diversify your risk of assignment. You can I can feel okay with a little bit more of that risk because I know it's like, okay, it's not the whole stack's getting assigned at 22. I'm not out of the game if something happens there. Yes, Chad, we are so cooked. Yeah. Yeah, that is the thing about leaps. I don't know if you do get them as leaps, they can be interesting. I mean, I think something like yeah, I don't know, give it maybe a little bit of time. Give it a month or something if we're still seeing that kind of sub 20 stuff to go in there and by I don't know, by January 2027s for $20 or something, or by April's or something like that. I don't know. Good idea. 2028s. A lot of theta in those, though. A lot of time value in the 2028s. What's a $20? What's $20 for? $7.50. You can buy a $20 call for $7.50. So $750 for a $20 call for 2028. If you do January 27, that same call will cost you $500. Yeah. Hello, John GameStop. $7 buckaroos. Yeah. All right, chat. I think that's got us cooked for tonight. Yeah, I think we'll take a pause in our discussion here to be continued next week. Very great to see you guys all. Happy New Year. Very very excellent to see our core group back in action today, as well as maybe some new folks, some drop-ins with respect to live streams. Looking forward to what we can get going this year. I think it's going to be another great year for GameStop. Very exciting to see us starting out at this point here, right? I think sky's the limit in terms of what we see pop up there. But just want to thank you guys as always for all your support in 2025. For making the channel what it is, for being the best chat out there. I want to thank you guys for supporting this whole endeavor and for helping not only me but so many other people come to get a better understanding of GameStop, to be able to participate in this thing, maybe to be able to clarify their questions, to get a better understanding of the market, financials, what they're trying to do in their lives. You guys ask great questions all the time. And part of the reason why I know the channel has the success that it does is because you guys ask great questions, and you guys come to stream and send me messages and do things like that really, make this whole thing happen. So I just want to make sure I say thanks to you guys as well for that this past year, and looking forward to 2026 and what new stuff we might discover. So thanks very much, everybody. We'll see you next week. Have a great weekend. And of course, let's go GameStop. We'll see everybody.